Ladies and gentlemen, good day and welcome to the Bharat Electronics Q4FY25 earning conference call hosted by IIFL Capital Services Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Ms. Renu Baid from IIFL Capital Services Limited. Thank you and over to you, ma'am.
Thank you. A very good morning to everyone present. On behalf of IIFL Capital, I would like to thank the management of Bharat Electronics for giving us the opportunity to host the 4QFY25 earnings call. From the management team, we have with us today Mr. Manoj Jain, Chairman and Managing Director, Shri Damodar Bhattad, Director Finance and CFO, and Mr. Srinivas, Company Secretary. I now hand over the call to Mr. Manoj Jain for his opening comments. Thereafter, we can start the session with Q&A. Thank you and open to you, sir.
Thank you, madam. Good morning, all. So I will firstly cover the financial highlights for financial year 24-25. The turnover increased to rupees 23,024 crore as compared to rupees 19,820 crore in previous year with a growth of 16.17%. The profit before tax increased to rupees 7,090 crore as compared to rupees 5,335 crore previous year with a growth of 32.91%. The profit after tax also increased to rupees 5,288 crore as compared to rupees 4,020 crore previous year with a growth of 31.55%. The EBITDA also has increased to 29.39% as compared to 25.22% last year. The earning per share increased to rupees 7.23 as compared to rupees 5.50 last year. Order book position as on 1st/4/2025 is rupees 71,650 crore. So overall on all the parameters, company has registered good growth. Parameters are well within what was given to you as a target or expected performance. I hope we have increased only your expectation. And now briefly about the current geopolitical situation. You all know BEL systems were there in all the forward areas providing offensive and defensive applications. Lot of C4I solutions developed by BEL and used by our users were there in the field this time. You have heard lot more through the media about BEL involvement. BEL teams were there in the forward area supporting our users and getting the feedbacks. Overall, we feel satisfied that yes, a technology developed by us was used by our user in a very, very efficient way. We got a lot of appreciation from our users presently. And regarding this emergency procurement, which government has now come out immediately, still the projects are being discussed. So various projects of Army, Navy and Air Force are being discussed. We are actively involving ourselves for those discussions. And we are hoping good orders will come under emergency procurement also for us. Otherwise also anyway we have a long lineup of various projects which we are expecting in this year and subsequent years. That is in brief from my side. Thank you. Thank you all.
Now start the session with Q&A.
Okay. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Mohit Pandey from Macquarie. Please go ahead.
Yeah, good morning, sir, and thank you for the opportunity and congratulations on a good set of numbers. My first question is on orders. So, firstly, any ballpark number you would like to share on what could be the quantum of, I know you mentioned this is still under discussion, but any ballpark number on what could be the quantum of the emergency procurement orders that would come this year? And secondly, any update you'd like to provide on the large pipeline orders such as QR-SAM and corporate-linked orders? That would be very helpful.
Yeah, certainly. Now, EP projects, it may be a bit early. Maybe another 1 week or so, we will get the correct estimate of what all the projects which are coming, which are to be done by BEL. Because, EP projects are for arms and ammunition replenishment, some other spares, etc., those, and a few critical subsystems or systems which they feel are to be purchased immediately. So there is a list of so many projects and spares which we are looking at. But at this stage, because the discussions only are going on, once the list is finalized, then only we will come back to you. Something like a minimum 8 to 10 or more different line items I am expecting immediately, minimum most. It may be even more also, because the list is being finalized till now. Now, regarding the long-term projects, yes, as you have told, QR-SAM, good progress is done on QR-SAM in last year. And as we told last year, we are expecting QR-SAM order, hopefully before March, but it may slip to April, May also. Right now, we are thinking it may come by February, March itself, because good progress is there on that front. But worst case, it may be shifted by 1 quarter. So that is our thing for this biggest order, which is, as I already told, around 30,000 plus crore order. We want to grab it in this year itself. Worst case, it will be Q1 of next year. And so many other big projects are in pipeline, which we are hopeful to realize this year and subsequent years.
Yeah, thanks, sir, for that answer, sir. If I can ask, what are the other bigger pipeline projects that you're expecting this year?
Yeah, certainly. No, the thing is, that is the biggest QR-SAM. But in addition to that, the NGC program, Next Generation Corvettes, for that there are so many items of BEL. So we are expecting a major order of that subsystems, because that will come from one of the shipyards only, or 2 of the shipyards who will become L1 and L2. So from them only it will come. So we are hoping that majority of those subsystems, there are around 10 to 12 subsystems which are there on these type of ships. So those will come in this year. Then we are hoping Shatrughat and Samaghat, that is a EW system. So that also we may get this year. In addition, so many other things like additional LCA requirement which HAL is pursuing. So from HAL we may get the order this year only. Then some B&D spares for LR-SAM, Atulya radar, Shakti, other GBMES. Like that there is a long list. ADFCR. So a long list of projects which we are hoping will come in this year. Worst case, they may go to slip to next year Q1 or Q2. So that way we have good leads right now, order acquisition related, and we are hopeful for be better next year.
Yeah, understood, sir. I have other questions. I'll come back into the group. Thank you so much and wish you all the best.
Okay, thank you.
Thank you. Next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good morning, everyone, and thanks for the opportunity. Congratulations for a good set of numbers. Sir, considering whatever you have discussed in the previous question, just wanted to understand the kind of order inflow that we may expect for this year. I know there has been around 3,300 crores that you have received so far. But what kind of order inflow do you expect this year? And the sub part of this question is that given that, we have seen skirmish on the border and missiles have been successfully deployed, but don't you expect QRSAM order actually to be expedited?
Yeah, that's why I told us earlier also. QRSAM order related, all the paper activities and other things are going on very, very fast. We have also made one team dedicated for only finalizing this contract with the user. We are hoping it may come by last quarter of this year itself. But we are telling, in addition to QRSAM may be roughly around 30,000 crore we are expecting. In addition to that, we are hopeful to get this year around 27,000 crore additional orders. So if QRSAM comes in this year, total we will cross 50,000 plus crore this year itself. Otherwise, also minimum 27,000 crore we are expecting this year of the orders which I have told you, a big list was there. So these all orders definitely will give us more than 27,000 crore this financial year as a order book. Additional order.
Just a clarification, 30,000 crores is the total size of QRSAM or our share?
The QRSAM is, we are the production agency for QRSAM. So order will come to BEL. So total 30,000 crore is what we are expecting as order from users to BEL. And this order actually combines Air Force and Army total requirement.
Got it, sir. The second one is on the S-400. So we found that S-400 was very successful in the recent clash, and Project Kusha is being contemplated now, as per the media reports, and the size of the order could be, as per media reports, around 40,000 crores. So what would be our share in Project Kusha?
As you have rightly told, yes, indigenous S-400 is called Kusha. And knowing the importance of this project, we started investing on this project. Presently, this project is driven by DRDO, and BEL is a development partner for them. So DCPT we call it. So we are the development partner with DRDO, and we are developing jointly with them so many subsystems of the Kusha. Mainly all type of radars, different type of radars are there in that, different type of control systems, control centers we call it. Those are there. There we are already nominated DCPP. System integration of this, system integrator for this is yet to be finalized. We are hopeful that we will be system integrator also. So in case we are system integrator, then as you have indicated, around 40,000 crore order will come to BEL, because system integrator only gets. If they decide to have two system integrators, then also definitely then 100% we will be one of them. We are confident of that. So then maybe around 20,000 crore as per your estimate will come to us as direct order. But the subsystems which are there, major subsystems of indigenous S-400 will be from BEL. So that's why we are expecting very good order book of these subsystems. But presently we are more involved in how to make this system very quickly jointly with the DRDO. So our main focus right now is on the development front, but definitely orders will come in a due course of time.
Okay, sir. Thank you so much. I have other questions. I will get back in the queue, and all the best.
Thank you.
Thank you. Next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hello.
Yes, sir, you're on.
Yeah, thank you.
Yeah.
Thank you, sir, for taking the question. So, though you articulated the kind of emergency procurement which is happening, just on the execution side, also you see what you would have planned 6 months back for this year, FY26. Is there a chance of faster execution because of the certainty of further disturbances, what is happening currently? Any change in outlook in that part on the revenue side?
Revenue side, anyway, at the end of the call, we will tell you what we are expecting this year. Okay. But as you have rightly told, yes, the need of the hour is to execute the project faster. So we are assessing that situation. Based on that situation, we will see how we and our overall system supports us. Because it is not that what we produce is manufactured within BEL. It is with a large number of MSMEs, other vendors who are there, who are supporting us. So we are in constant touch with them in last 15 to 20 days and seeing how we can overall make the total execution faster. Internal also some process improvements further we have done. So jointly between that and discussions with our MSME and other vendors, we will come out with a plan of executing it definitely more faster than what is expected by our users now. I can tell you, we are going to meet or exceed our user expectations. That is our goal. Even during this Hop Sindoor also, whatever users expected, definitely I am confident that we have met or exceeded their expectation in terms of support, spares and other things. And we will continue to do that by giving them earlier to the requirement deliveries. So that we are doing all these things and definitely we will execute it faster than their expectations.
And any comment on the profitability, sir? It's been very strong, Q4 specifically as well. So whole year margins are pretty much higher than your guidance. How one should look next year, if you can comment one on that. That's it.
The revenue and margins guidance will give at the end.
All the best, sir.
Hello.
Yes.
Thank you.
Thank you.
Thank you. Next question is from the line of Sagar Gandhi from Invesco Mutual Fund. Please go ahead.
Yeah. Am I audible?
Yes, sir.
Yeah.
Yeah. Sir, my question is on the working capital. While the performance has been outstanding, our working capital seems to have deteriorated significantly, both on the receivables inventory front and payables also. I mean, you have cleared substantial amount of liabilities. If you can comment on how do you see this receivables inventory changing over the next few quarters?
See, if you look at our working capital position, it has been fairly stable around 1.5 current assets to current liabilities. Even in the current year, the 31st March 25, the current ratio is around 1.7. So receivables and inventory, there's not much change as compared to the previous year. Maybe 5-6 working days, 5-6 days is the higher, that's all. So overall, it remains same. Working capital position remains good, and we are getting good inflows from the government side also.
So, sir, your other liabilities, if you look at your cash flow, other liabilities section, there is a material change, 2,900 crores change year over year. And consequently, that has led to net cash from operating activities going down from 4,600 crores to only 586 crores.
No, that is, if you could see, it is on account of the advances. What we had received last year order book, the advances were slightly higher. This year, the total order book intake was slightly less, 18,000 only, as you are aware. So based on
Yes.
that, from operating to that extent, it is less.
But there are no challenges on the receivables front, is what you confirm.
No challenges, yeah.
Oh, thank you, sir. That is it from my side.
Thank you. Next question is from the line of Vatsal Desai from HDFC Mutual Fund. Please go ahead.
Hello, am I audible?
So can you come a little closer to mic?
Hello, am I audible?
Yes, sir. Please go ahead.
Congratulations on a great set of numbers, sir. So my question is again regarding the emergency procurement. So could you give a quantum of what will be the size of the procurement and what will the margins look like for those?
Again, as I told you, it may be a bit early. Maybe I hope within the next 8 to 10 days, all the EP procurement list by all the 3 defense users will be finalized. And then only we will have the correct estimate of what all the projects which will come to BEL in that. So today it's not appropriate for us to tell, but we are discussing for various requirements, emergency requirements from them, but how many they are going to freeze under EP and how many they will go through the normal FTP or other path, that the call user has to take. So once that list is finalized, then only we will start responding and planning for quicker execution for those EP projects. So today I can't give you the quantified figures.
Understood, sir. And you also mentioned faster, you try to, implement faster execution for these projects. So, will that escalated pace of execution impact margins positively or negatively?
See, margins guidance, including everything, we'll be giving at the end of the conversation.
Okay, sir.
We are assessing all the situation. Based on that only, we will give you our final figures of the margins and others at the end of the call.
Okay, understood. Thank you.
Thank you. Next question is from the line of Atul Tiwari from JP Morgan. Please go ahead.
Yes, sir. Thanks a lot. Sir, my question is on NGC program. Could you shed some color on the size of the order that you could expect from this?
As I told, we are having so many subsystems of NGC. So almost all electronics in the NGC program will be from BEL. The thing is, the subsystems finalization with the shipyards may take some time. Overall, it will be of the order of 6,000 to 10,000 crore. I don't know exactly right now how much they will realize this year and how much may spill over to next year. But large amount of order, maybe largest in this year after QRSM, will be from this NGC program. But technically it is subsystems. So different orders may come from two shipyards. But put together, the figure will be between 6 to 10,000 crore somewhere.
Okay, sir. And sir, my second question is on your exports. What was the quantum of exports in FY25? And are you seeing increased traction in exports because of the performance of your products in the recent conflicts?
The thing is, last year, I think we achieved $1.66 million, which was a healthy growth for us as compared to overall Defense Ministry. All the productions, defense productions, what they have achieved, overall we have exceeded from that. This year, we are planning around $120 million. But as you have told, lots more leads are now fructifying or may fructify based on the last geopolitical situation where our equipment solutions performed exceedingly well. But that takes its own time. That takes minimum, I can say, 1 year for us to convert those leads or those advantageous things to a order. So we have to wait for at least 1 year to get those orders, and execution will take another 12 to 18 months. So export front, we will see right now our growth based on our previous order book, etc. We are expecting around $120 million this year, which is again a healthy growth of more than 15%. We are targeting maybe after 1 or 2 years, based on the whatsoever progress we may get on these new leads, we may expect more than 20% growth. But for that, we have to really work hard this year to convert those leads into confirmed orders. So that at the end of this year only, we will let you know how much we have engaged on the present technological solutions which we have to generate new leads.
And sir, a follow-up question on exports again. Over past few months, we have seen European rearmament, and we are given to understand that you already have some relationship with various users in Europe, in supplying components and all that. So are you seeing, some kind of traction for supply, for European rearmament from your side?
Definitely, this is a good for BEL, because so many of our electronic systems, our fuses, different type of fuses and other ammunition which we are now in, so those are really required by European countries. So we are in constant touch with our internal teams, defense attaches at those countries, etc., and coming out with our revised marketing plans to capture projects on those countries. As and when we capture any project, we will definitely immediately come back to you that this we have got. So right now, these are again leads or opportunities for us, and we are working hard to convert them into orders.
Okay, sir. Thank you. Thanks a lot.
Thank you. Next question is from the line of Jyoti Gupta from Nirmal Bang. Please go ahead.
Thank you so much, sir. Great set of numbers. My question is, of course, you being a defense PSUs, the lineup of orders will never be an issue for you, and you will continue to have very large orders. But my first question is, in terms of margins, we've seen a sudden jump by 4% on a year-on-year basis. Any specific reason that we see this margin which has happened? And the second thing is that while I understand a lot of procurement orders will be finalized in the next 7 to 8 days, even if they were not there, without that, could we manage similar margins going forward if there was no such emergency situation or any of that sort? And why was other expenses, there's a sharp decline in terms of raw material and other expenses in the fourth quarter on a YOY basis. Could you please explain that?
Yeah. The margins increase, what you were telling in the beginning, it's purely due to the scale of operations. The scale of operations was higher, which led to the increased margins. So material consumption remained around 55% as was in 23-24. The same was in 24-25 also. So the material consumption being 55%, the scale of operations led to increase in EBITDA margin. As far as the current year margins are concerned, we'll give the guidance at the end.
Okay.
Other expenses reduction you had asked. Other expenses, last year we had a provision for intangible assets of 96 crores, so which was not there this year. So that led to the reduction in other expenses. Other things more or less were constant. Normal increases were there as it is for the scale of operations. Because of one intangible assets provision which was there in 23-24. So due to that, the other expenses got reduction. It has got reduced.
Okay. Other thing is, in terms of as an integrator, you said, one is you said you will have the subsystems and then you're also looking at integrator, becoming an integrator for some of the procurement platforms. Now my question is, if you were on the, how, this is irrespective of whether the orders are there or not, but on a general basis, on a base case scenario, if we are on subsystems and we move to an integrator, how does that really improve my margin?
No, the thing is, when we are subsystem fellow, subsystems are generally homegrown, so we have definitely good margins for that. System integrator role is a bit different and challenging because he has to take care of integrating all the subsystems and delivering the required results. The system integrator generally gets the direct order. So from order book point of view, being a system integrator is definitely, it will affect or it will improve my top line. But subsystems which are there, which will come anyway, whether I am system integrator or not, will make my top line reasonably okay. But definitely my bottom line is more better with subsystems. So subsystem and systems both are required for BEL. And especially BEL type of a company only can play the role of system integrator because that challenges at system integration are of totally different variety. Different type of experience are required. Different type of integration skills are required in addition to project management skills. So that being a last 70 plus years in this field, we know all the present system, future system, legacy systems, those system integration and overall project management for this type of a large project, which covers multiple technologies like radar technology, ammunition technology, missile technology, and control systems, GUIs. They are different type of some 10 to 12 different technologies are there. BEL is luckily working in all those technologies. So we can give much more quicker and better system integration experience to our defense users. So that's why generally for these complex systems, first choice is typically BEL. But wherever they have not selected us, we are trying for that. Some of the cases, as a strategy, if they want to become two system integrators, then they will select definitely based on our BEL's experience of last 70 years and all large system projects which we are handling presently also. So if they give competition, we are hopeful definitely we will be one of them. But that's all different user directorate or DRDO. They will decide whether they want two system integrator or single system integrator. Personally, I feel single system integrator is the right choice because you can't develop system integration capability at two different parallel places because that challenges and then synchronizing these two system integrators may be a tough call, but that call I leave it to users or our DRDO friends to decide. because we will not come into that. We are capable of being system integrator. That only we are telling, and we are hopeful to be system integrator for all these bigger, larger programs.
Thank you, sir.
Thank you. Next question is from the line of Sumit Bhatnagar from LIC Mutual Fund. Please go ahead.
Thank you, sir, for this opportunity. Sir, my question is regarding Project Kusha. Any timeline when we can expect this order, FY27, FY28?
It is still in R&D phase. So R&D phase, we can't predict the overall trial times. You know how much time it takes for different type of terrains, testing and validation by the users. I hope prototype will be available for all these things in next 1.5 years total time frame, because we are only developing majority of the subsystems for that. So next 1.5 years it will be available. After that, typically for these type of systems, it may take around 12 months to 24 months of trial. Sometimes it takes even 36 months also. So this program is driven by DRDL. So we will give right support to them so that they can compress their timelines. But exact timelines of the project, it is better that you ask DRDO only in some different forum. Because right now we are only giving total development support to DRDO because the program is driven by DRDO.
Okay. Thank you, sir. That's it from my side.
Thank you. Next question is from the line of Devesh Lakotia from Ikigai Asset Manager. Please go ahead.
Yeah, hi. Sir, congratulations firstly on a great set of numbers. My question was again on the margin side. Just wanted to check, while you have highlighted that margin improvement is partly on account of operational increasing scale of operations. But is there so couple of things on the margin side? Is there particular segments or particular products that where you earn better margins compared to others, or has the margin profile at the contract signing stage itself increased over the past few years? So from a continuity standpoint, is it fair to assume that obviously guidance you will give later, but is it fundamentally higher margins that we are looking at as a company?
So as we told, the scale of operations led to the increased margins. And as you yourself told that the guidance for the current year will be given at the end of the call. So that's what I would like to tell on the margin front. And as far as your question on whether you're on the contract signing stage and segment-wise, these type of information generally we do not tell about which segment what we earned, because segment-wise information we do not give.
Just I wanted to add 2 more lines in that. These margins are going to increase further, I can assure you, because we are doing real rigorous indigenization of the various systems, subsystem, and even at component level through directly by BEL or by involving all our industry partners, including MSMEs and startups. And of course, many of the subsystems are in-house developed. Like you have seen latest Akash program. More than 90% indigenous content was there, and most of the subsystems of this were made in-house. So this in-house development, meeting the exact requirement and indigenization drive, these two will definitely take margins higher and higher. That much I can assure you.
Thanks a lot.
Thank you. Next question is from the line of Ranodeep S. from MAS Capital. Please go ahead.
Thank you for the opportunity, sir. Sir, if I'm not wrong, till now we've released 5 lists of embargo. Any expectations for any 6th list being released, and is BEL slated to capture that market share? Thank you.
The BEL list you are referring, I believe, the positive indigenization list, which indirectly put embargo of not importing them. So we are there in all the BELs, because majority of the systems directly indirectly have defense electronics or systems in mind. So we are there we are developing so many solutions as part of PIL 1 to 5, and some of the solutions we are working jointly with our other ecosystem partners. So PIL 6 whenever will come, definitely it will help BEL, because BEL main motto is indigenization or developing the systems and solutions indigenously. We are born for that mission only. So all PILs are directly, indirectly will definitely help BEL.
Sure. Thank you for that. Sir, can you share some thoughts around, we did see a post that around 299 patents BEL has now under its pocket. So is there a school of thought around monetizing it in the future, or what is the guidance around it?
Let me tell you, our first aim of filing these patents was to protect IP, because this is a defense IP. So this IP should be protected. So first aim was to protect that. But as you have told, yes, if somebody comes for using this or commercialization of these patents, if some real needs are there, then we should commercialize that also. But that is a slightly more involved process. We are in the process of finalizing the ecosystem for that. Because first thing is we should have a transparent way of valuation, IP valuation we call it. So that should be done, because I should know what is the price of this. So price and price benchmarking has to be done for these patents. We are in the process of finalizing one or two agencies who can do this job for us. And once that is done, then only we can go for and offer it to somebody who is interested in that. So today it is a bit early for me to tell how quickly I can commercialize my patent. But main aim of patent was to protect the IP.
Sure. So one last question, and pardon my enthusiasm here. If I see the last 10-year sales growth is at 12% and last 10-year profits growth is 15%, this has led to an amazing 27% growth in the stock price. Any guidance in terms of where do you see the revenue growth in the next 5 years at least?
Okay. Again, that is, I am also highly optimistic. So I can tell you the growth, what I want to have, definitely it should be minimum 15%. So 15 to 17.5, and after 5 years we want to touch even 20%. But right now it is 15 to 17.5% growth, what I am looking at, and I am confident we will definitely achieve it in the next 5 years. And about profit also, as you have told, it was 15, and now we are giving consistently more than 20%. So we are hopeful once this indigenization and lot of in-house developed products based on our in-house R&D strengths, products and solutions are there, which are meeting users' aspirations. So definitely it will be definitely more than 20. So first figure will be more than 15 to 17. Second figure will be more than 20. So what you have told 27 will definitely become more than 30 to 35% for you. So we are hopeful for that in next 5 years. You will see. We are working towards that. How much we will achieve that, God only knows. We are only putting efforts for achieving that. And we are hopeful for that because of the overall ecosystem which is there, overall strengths which we have acquired over a period of time, especially our in-house strengths, working with academia, working with startups, working with other MSME and other stakeholders in this domain. So collaborative working, even with our competitors also, we are doing now on larger scale. So with these type of strategies, I am confident we will achieve. We want to not only meet your expectation, we want to exceed your expectation. That is all what our whole team BEL is continuously doing, and we will not disappoint you.
Really appreciate the response and the long responses. So thank you so much and wishing you all the best and helping India stay safe. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your question to only one question per participant. Should you have a follow-up question, we request you to rejoin the queue. Next question is from the line of Deepak Krishnan from Kotak Institutional Securities. Please go ahead.
So just wanted to understand just one thing on the margin front. I know while you give the guidance at the end and you indicated scale, But if you look at this year also, we are doing system integration LRSAM, which would sort of be the biggest, revenue contributor. So in spite of, doing much more higher system integration, we are seeing much higher margins at a gross level, even, over the last 3-4 years, what the numbers have been. So is there anything else that we should be aware of that from even at a gross margin level, as we go ahead and do QRSAM and some of the other system integration projects? In addition to indigenization, we are seeing this, huge ramp up in gross margins. Sir, any thoughts over there?
Sir, the gross, this margins, whatever you are talking of, it's not only LRSAM we are doing many product systems across all the SBUs. So what we get is a result of combination of factors. So there are some with little lesser margins, there are some with better margins. So all this combination of factors is what decides the final margin. So it's, as Sir rightly said in the beginning, we do system integration also, and we also develop subsystems, modules. We sell subsystems and modules levels also. So with this combination, we are able to arrive at these margins. Individual margins, as I told, we will not be able to comment on that.
Sure. Just one question on the 27,000 crore guidance. The emergency procurement will be above and beyond that, right? Whatever we get from that, that is not included in the core order inflow that you're guiding.
What you are talking, we are talking of 27,000 figure as an all-inclusive figure. 3,300 of this has already been received. Balance 24,000, whatever we expect to receive in the current year. Of course, it is excluding QRSAM.
Sure, sir. Okay. Those are my questions. Thank you.
Thank you. Next question is from the line of Manish Ostwal from Nirmal Bang Securities. Please go ahead.
Yes, sir. Thank you for the opportunity, and most of the question answer already have. I have only one question in terms of achieving the growth of 15 to 17% over the next 4 to 5 years. What kind of investments we are making in terms of capex, and secondly, R&D efforts. Can you talk qualitatively on these two aspects? It will be great help for us. Thank you.
As you know, as you have rightly told, once we have to have better growth, then we should have good products and good infrastructure. So both are required. So as we have told, we are investing on both fronts, whether it is an R&D front or whether it is an capex front. Capex front itself, I think this year you might have noticed, we have increased our investment. I think last year it was around 600 plus crore. This year it was more than 900 crore. And next subsequent years, we have a really good growth plan. I can assure you it will be more than 1,000 crore per year we are going to invest. Exact values we will tell you from time to time. But it will be more than 1,000 crore per year is the investment in capital we are looking at. We are having plans of making new factories at important locations in India, which will be, some of them will be even bigger than our present establishments. So we are investing heavily, and we will going to invest heavily on bigger infrastructure. In addition to smaller infrastructure like product support centers and other infra for serving our users better. But the big manufacturing setups, 2 or 3 are already in the pipeline, which are going to be inaugurated very, very soon. But 2 or 3 bigger investments, which are actually larger than our present 2 big factories. You know, our biggest factory is in Bangalore complex in Bengaluru, and the second one is in Ghaziabad. So we are planning to have bigger than these 2 units, more units in future. In next 2 to 3 years or maximum 4 years, we will see that we will start operations in those new locations also. So that will take care of this year-on-year growth of 15, 17.5 and beyond. R&D also same way, we are already scaling up. You will see further big programs, big R&D investments done by us. And not only on the revenue side, on manpower front also. So this year itself, I think we are investing in R&D manpower alone around 700 to 1,000 engineers. So that we can take up much more challenging and big programs. But as you have seen, now we are not only at subsystem level, we are at system and solutions level company. Like the latest Akash Tir program you have seen, or Akash program, or ISCCS program, or BSS program. These all programs require lot many software and hardware engineers. When we are developing it, majority in-house also. So we are investing on R&D manpower, R&D infrastructure, R&D projects, jointly with the industry partners, as well as capex related big infrastructure investments. So all these, once we are doing, I'm confident that we will achieve this type of growth which I have indicated.
Thank you, sir. Thank you.
Thank you. Next question is from the line of Dipen Vakil from Phillip Capital. Please go ahead.
Thank you for the opportunity and congratulations on a great set of numbers. So my first question is it possible for you to give a order book breakup with respect to key projects that are currently outstanding in your order book?
Certainly. The biggest order book right now is LRSAM, then Himshakti, Akash Army, D-29 EW system, LRUs for our LCA 83 aircraft, the BSS project, the ADCRS Akash Tir project, the Arudra radar which we received last year. So these all are planned to be executed mainly this year. Overall, we have around 71,000 plus crore of order book, which is having so many items which are lined up for next 2 years, typically 2 to 3 years. And out of that, what I just now told you are to be executed this year. So we already planned what all these major programs, how we are going to execute. And that's why we are confident we'll give a good growth to the
on the percentage front, these large projects would contribute to how much percentage from your total order book?
Which large project?
Large project, LRSAM.
It's a large project. For this year execution or total? Overall order book wise, the top 12 projects
constitute about 40%.
40% of the order book is from the large projects.
Got it. So what would be your defense and non-defense split for FY25 on revenue front?
That will be okay. It will be around 92 to 93% defense and remaining non-defense.
Got it, sir. Thank you so much for answering my questions and all the best for FY26.
Thank you. Next question is from the line of Raj Rishi from DCPL. Please go ahead.
Yeah, like the non-defense part, how much do you see as a percentage of turnover in 3 years?
Non-defense presently, as I told, is around 6-7%. And when this EVM related execution are there, that is typically becoming 12 to 14% also we have touched typically. 15%, up to 15% we have touched earlier. But we are focusing on other non-defense avenues also. So our aim is without EVM also we want to cross 10% immediately. And in longer run, it should cross 15+% in non-defense.
And sir, Europe is significantly ramping up its defense budgets. Do you expect BEL to benefit from that?
Definitely, as I told, some of our products, arms and ammunition, fuses, etc., we are planning to supply to them. But one more thing where we are looking at them is a lot of contract manufacturing, this quality contract manufacturing for aerospace and defense, which we are doing. We are thinking that much more scaling up will be possible for that.
Okay.
Because knowing their manufacturing constraints and knowing our infrastructure and our quality consciousness, which we have proved beyond doubt to them. So they are coming up with so many systems and subsystems to manufacture in India also for their global requirements. So we are working on both the fronts.
And sir, your views on the perception is that post Operation Sindoor, combat tested Bharat Electronics products, you mentioned in your Twitter handle also, there's a game changer for the profile of Bharat Electronics. What's your comments on that?
Now, the thing is, we are working for last at least 20-25 years on all these technologies, especially the Taxi 3I programs or the large missile programs. We are working on all these things. We are supplying to our users. First time it has been used in a war-like situation. So practically how it is used, that gives us much more confidence and our users also much more confidence on this complex technological solutions which we have made for them. So that perception of them will not only improve our order book from Indian users, but definitely it will help us to export some of these solutions or variant of these solutions to various countries worldwide.
Okay.
So that is our aim. So we are hoping for getting good export order book from these technology, which is now proved their efficacy in the real war type of situation.
Right. And so last question, what's your expectation on the drone and drone front? How and BrahMos? How are you involved in these two projects?
BrahMos, we are involved in some 2 subsystems right now. I will not tell you the exact scope of those things, but definitely we are there in BrahMos, I can assure you.
Is it significant,
we are changing our scope of work or contribution in BrahMos. Because as you know, lot many requirements are coming up from not only from India, from other countries also. So BrahMos Aerospace also has approached us for doing right investment to see that large quantities, how we can support them. So we are in constant discussion with them. We have come out with plans to manufacture and even design some of the next generation subsystems for them. And you will see much more contribution from us for BrahMos also. Akash, anyway, you know we are working.
Yeah.
Same thing is on drone also. Drone front also. Some 4 or 5 important drone related activities we are working. And drone warfare is integral part of our present C4I solutions. Like you have seen Akash Tir or BSS or other program, ISCCF, there is a drone warfare modules in all of them. But we are working on making it next generation. Because as you know, drone related technologies keep on changing. So our drone warfare also should be always better and better. So for that we have tasked our software teams or our Taxi3i teams to come out with better and better drone warfare solutions using this latest technologies of AI. So that work already we have started for that.
Okay. And so last question, there were some reports that from 5G when we go to 6G, it's going to be a game changer for dev tech. So view on impact on Bharat Electronics?
5G to 6G for telecom or which one you are referring?
No, like generally if the spectrum goes from 5G to 6G, for dev electronics, a company like Bharat Electronics is going to be a game changer. What's your comment on that?
And whenever any new technology comes, there is a scope of getting newer and newer orders. So this 6th generation technologies for telecom especially and networking, that we are already started working with our CRLs. You may be knowing we have Central Research Laboratory. So they are looking at all these technology, how to use them and adapt them for defense needs. So we are investing on those fronts in our research community. And definitely every new technology, I can tell you, will give more and more business opportunities for companies like BEL, who are there in defense electronics, which are staying because of the technological advancements. So any new technology gives us a lot of opportunity. We don't see a technology as a threat. We see a new technology always as an opportunity.
Okay. Thanks a lot, sir. Thank you.
Thank you. Next question is from the line of Karan Gupta from Kisit Mehta. Please go ahead.
Hello.
Yes, please go ahead.
Is it audible?
Yes, sir.
Yeah. So good morning, sir. My question is related to, first of all, on the revenue side this quarter. Is it some lack of execution, sir, that we have reported less for this quarter only compared to essentially previous quarters and last year?
No, we couldn't get your question fully.
Can you repeat?
Is there any lag of execution this quarter? We reported 6.5% of growth this quarter compared to sequentially quarters and last quarter.
No, are you talking of lack of execution or what?
Yes.
Overall, we had given a year-on-year guidance growth of 15% revenue growth, and we have achieved 16%. Quarter-on-quarter, as we have told earlier also, there are some variations which happens due to the nature of products, nature of systems. But overall, our revenue guidance was 15% and the achievement has been 16%. Quarter-on-quarter variations are there, which you have earlier also told in the Concall.
Okay. The other income side, which has been now the part of your EBITDA is now 10-11%. So what is the other income? In the last 2 years, which has increased significantly. So what is the other income part?
Other income part is not counted for the EBITDA margins. Only operating income and the production is counted. Other income is not a part of EBITDA margin.
No, it's
You
fine.
not
But
get into the accountancy part of it. Let's take it that way. EBITDA margin is what is EBITDA margin.
okay. I'm just asking, what is in this other income? What is increasing in the last 2 years?
What is there in the other income is the mainly interest income on term deposits what we get. Dividend income, interest income. These are the other incomes.
Okay. And just last one on the working capital side. The receivables has increased with this quarter. The operating cash flow is comparatively significantly lower than last year. So do we have any problem on the receivable side? Will it recover next year or this year, FY26, fully or partially?
There is no problem on the receivable side. The operating activities, cash flow from operating activities, what you are dealing significant reduction, it's just a reduction due to the some of the orders getting into the next year. What we thought will come in the previous year, we got 18,000. So some spillover was there as we had given in our first week of April guidance that some 5,000 crores negotiations were finalized and it has got spilled over to the next year. So that was that is what led to the reduction in cash flow from operating activities. Otherwise, there's no challenge on the receivables front. And overall, the difference is only 5-6 days compared to last year, which is because of the slightly increased sale in the last quarter of the current year.
Okay. And how much outsourcing we do from local manufacturer or some small companies, some small businesses?
See, generally our MSME procurement is in the range of 30%. Total procurement our MSME procurement is around the range of 30%. I don't have the exact number for 24-25, but it remains in the range of 35% actually.
35% what we can consider for the overall order book. If we are executing, let's say, 1,000 crore of some project, so then
overall domestic procurement, 35% comes from MSMEs.
Okay. Thank you.
Thank you. Next question is from the line of Nikhil Purohit from Fident Asset Management. Please go ahead.
Hi, thanks for taking my question. Just one question. I wanted to understand what products capture higher margins. I'm aware you don't give out individual numbers and I don't want the margins for each product, just the products which are margin accretive for the company. That's it. Which of them are they?
You ask the question straight or you ask this way, it doesn't make much of a difference. No? If you tell high margins, automatically the others are low margins. So it really doesn't make a difference. You don't ask margin product-wise or you tell of the higher margins. So all we tell is we don't give segment-wise margins. We don't tell product-wise margins. We talk only of the overall margins. Definitely there will be some high margin, some low margin. All these combinations are there. There are more than 200, 300 products and services we are offering. So there are combination of factors. And overall margins is what we give the guidance for.
Got it, sir. Okay, thanks.
Thank you. Next question is from the line of Harshit from Elara Capital. Please go ahead.
Hi. Thanks for the opportunity and congratulations for good results, sir. I have two questions. On the order inflow side, since you mentioned that there is a risk that it can spill over to April, May, is this because now this year we are having an emergency procurement and the budget is around 1.8 lakh crores, so they have to extinguish this budget? Earlier, EP was not part of this spending. So because of EP spending coming in, some order may be pushed to the next year. Is that a worry for you? And secondly, if you can share some details on the counter drone system, sir, which has been applied, has this been used in the conflict which happened, and you are expecting any orders coming from the counter drone system? Thank you.
Okay. Firstly, let me tell you, this QRSAM which I was expecting may go to next year, not because of the budget, I feel. Budget, Government of India has allocated enough, and this year also, as you might have seen in media report, 40 to 50,000 crore additional budget also they are giving. So I don't see budget as a problem. QRSAM is a very, very big program. And a lot of internal processes are there. Negotiation rounds will be there. Scope of work will be there. The thing is, it is jointly progressed for Indian Army and Air Force. So those type of procedural challenges only I am seeing, which we can't predict the timelines. That's why I told it may be last quarter of this year or first quarter of next year we are expecting that to happen. But no way it is not related to budgets. It is related to process-related time it takes for such a large program. I can tell you it will be the largest program once we receive it, what BEL has received. Because till now, I think we have received largest order book of single order of around 8 to 10,000 crore only. So this is 30,000 crore. So definitely a lot of paperwork, lot of processes has to be followed by all for that. So that only I am expecting. It may take this much time, seeing the size of the business for this.
Understood, sir. And overall size of the QRSAM is 60, right? And you are only getting the first and the second regiment as in 30,000. Is that a correct understanding?
No. I never told that. Last year also we made it clear. The first order of Indian Air Force and Indian Army will come to BEL because that is a combinedly processed. And they are nominating BEL as a production agency. It was already nominated BEL as a production agency. So this first order, combined order of these is around 30,000 crore. That order, we are confident to get it. After that, next order, when they will place, I don't know. That maybe because of the success of the first order, they will wait or what. That is a government has to tell. Right now, government is processing the first order, first biggest order. And later on only subsequent orders may come. But this first order, we are hopeful to get 100% to BEL only. No other fellow. And regarding counter drone system, it is used. It has used its effectiveness in the recent Op Sindoor. You have seen through media reports also. We had supplied these systems to Army, Navy and Air Force, and it has performed very well at all the three fronts. In addition, we have got recently order from BSF also for that. Okay. And recently one more order from Army. We have got a few days back. And we are hoping to get some more repeat orders for this. Because it has proved its efficacy in the field conditions and user is happy. So user is recommending it for repeat orders. So we are hoping to get a few more repeat orders of this counter drone system.
And you have soft skill and hard skill both, or you are only into soft, sir?
No, we are into both. And this particular counter drone system which you are referring has both the features hard skill and soft skill. Although we have some solutions which are only soft skill also.
Understood. Any quantum of per size, or will it like 50 crore, 100 crore? This counter drone system would be approximately?
You might have seen that recently we have published, we have not given that detailed breakup, but a good counter drone system, rough value only I can tell you is around 15 to 25 crore. Is a good, with hard skill, soft skill, both combination is around that range, depending upon the configuration, when spares and other support, etc. The value may vary, but it is of that magnitude.
Understood, sir.
Perfect.
Thank you. Thank you very much for answering all the questions and wishing you all the best, sir. Thank you.
Thank you.
Thank you. Next question.
So I think we can wind it up, madam. Because it's already past 11. Huh?
Just see if one or two more questions. Afterwards, we should wind up, madam. Please. This is our request.
Noted, sir. Next question is from the line of Khush Nahar from Electrum PMS. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity.
My question was regarding, I think recently we have won some orders for our software-defined radios. So could you elaborate more on what kind of opportunity we are seeing in this in terms of maybe yearly requirements or the opportunity over the next 3 to 5 years? And what is the competitive landscape over here? Is it an in-house technology or are we lead integrators for this product?
The SDR, software-defined radio, is a technology in it itself. So all the radios in the field, whether it is there with Army, Navy or Air Force, are being replaced by SDRs. So as you have told, competition is there or not. For naval programs, we are supplying, I think, some 5 different type of SDRs. And for those, we are the single vendor because we were the first one to develop these jointly with our DRDO friends and some other industry partners. And we were the production agency for that because SDR is a complex technology in itself. So all the naval programs, we are the single vendor, you can say, and we are supplying large numbers. And recent order of last, I think, few months back, we got around 1,000+ crore order. That was for SDR Navy versions only. Regarding other services, like especially for the Army, where we have supplied all their tactical radios right now. Majority of them are from BEL. A few were imported also when BEL products were not there in between timeline. So they were there. These all have to be replaced by now indigenous SDRs. So we are expecting of the order of roughly around 40 to 50,000 numbers of these SDRs for Army in years to come. And for that, we are one of the leader. But definitely there will be some competition from other players. But today, for one of the DRDO program, we are the nominated production agency. And that SDR also has come up very well. We are soon expecting big orders for that. And parallelly also we are developing other form factor SDRs where there is some competition. But knowing our strengths and knowing our success for our naval and other projects of SDRs, we are confident that more than 80 to 90% of those orders, or maybe best case 100% of those orders also will come to BEL.
So if you could help me with maybe some rupee crore in terms of pipeline for the next 3 years or 5 years, whatever visibility we have.
The order book, new order inflow in next 3 to 5 years will be sufficient to make our company grow more than 15%, I can assure you. We are targeting around 15 to 17.5% of growth in next 5 years, as I already indicated. We are confident our order book will be more than that.
Yeah. So thank you for the answer, but I meant about the SDR pipeline that we are seeing in terms of rupee crore.
Okay, SDR for naval front, I think we have got order worth around 2,000 to 3,000 crore roughly in last few years. We are expecting from maybe another 2,000 to 3,000 crore in next few years. But biggest numbers will come from Army, where as I told you, 40 to 50,000 numbers roughly SDR they will be requiring immediately. So tentative cost of one SDR I can guess is around, depending on again the configuration, 10 lakhs to 20 lakhs to 30 lakhs. So 10 to 30 lakhs I am expecting for SDR. You can take average of 20 lakhs. So 20 lakhs into 40 to 50,000 is what the volume expected or business volume expected of this SDR.
Right, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question of the day. I now hand the conference over to Ms. Renu Baid for closing comments.
Thank you. Thank you everybody for participating patiently. Before we close the call, I would request Shri Manoj ji to kindly reiterate the annual guidance of fiscal 26, and then we can close the call with his closing remarks. Thank you, and over to you, sir.
Okay. So our guidance for financial year 25-26 is revenue growth around 15%, EBITDA margin around 27%, order inflow more than rupees 27,000 crore. The R&D investment, definitely we want to increase, but it will be of the order of 1,600 crore and beyond. And the capex, as I told, more than 1,000 crore. And defense to non-defense business, typically we are expecting around 90 to 10. ratio. So these are our guidance for year 25-26.
Thank you. On behalf of IIFL Capital Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.